Hi friends, once again welcome back to Roji's Share Tips. In today's video, we are going to look at the share analysis of TCS. The reason why we are doing the share analysis right now is recently the share has gone through a correction after the Q2 results, and right now the share is in a good buying level. The business model is IT services, consulting and business solutions, and we all know that it has a very good growth potential. Market cap is around 13 lakh 4,304 crores, the large cap stock, and it is the largest IT company, much more than Infosys and IT, almost double the size, right? And it is the largest IT sector stock in India. The current market price stays around 3526, which is an 11% discounted price from its all-time high of 3990 happened in 2021 October. The book value is 262, which is just 7.5% of share price. And we also know that it is an FNO activated stock, means that trading is happening in very large volumes. Face value of the share is just 1 rupees, showing that stock split is not possible at all. Dividend yield is 1.08%, shows that 108 rupees returns per year for every 10,000 rupees invested, showing that company is providing a very small dividend yield. Now if you look at bonus history, you can see company has issued 3 bonuses, and the last issue happened in 2018 at a ratio of 1:1. But we have to note that the second last issue happened in 2009 at a ratio 1:1. So between the second and third issue there is a long gap. So we cannot expect that the company may issue a bonus in another 2 years or 3 years. Maybe it happened in another 4 or 5 years possibly. So we cannot expect a bonus immediately, but there is a hope. If you look at the 12-month returns, it is 32.64, which is okay. 5-year returns 231.61, that is also good. Maximum returns in 21 years is just 2.828%, that is also okay. Not very great, but okay. If you look at the inventory turnover, it is 2.15, which is considered as low, and the pledge percentage is 0.00, showing that company hasn't pledged any of its shares. Earnings per share is around 87.7, showing that it is a moderate because 2.4% of the stock price is covered. ROE 39.1, ROC 48.9, and ROA 26.8, showing that the company's return profile is looking very good. These figures are looking very good. Debt to equity 0.8, which is very good. Debt to profit 0.25, which is also very good. Promoter holding is around 72.19%, showing that promoter has very high confidence in this company. Now if we look at the contribution of Dii and Fia, you can see it is 7.89% and 15.37% respectively, which means that they have invested decent amounts and the company is very much attractive for investors. Now if we look at stock PE, which is 35.7 against an industry average of 39.7, showing that company is slightly undervalued and it is not at all overvalued. In the last 11 years, company made consistent and fairly growing profits, showing that your money is absolutely safe in this company. The financial parameters are looking good. Almost everything is looking very good for this company. If you look at the reserves of the company, it is currently 86,063 crores, increase from the previous year 83,751 figure, which means company has sufficient reserves to handle any kind of economic shocks. If you look at the cash flow, you can see a negative value, but the debt is consolidating, which is very positive information. If you look at the CEO and Managing Director, you can see it is Mr. Rajesh Gopinath, who is age 50 and is basically an electrical engineer from REC, which is now NIT Tiruchirappalli. He also has PG diploma equal to MBA from IIM Ahmedabad. He also got 25 years experience in Tata Group. Now if you look at the chairman, it is Mr. N. Chandrasekharan, age 58, who got a bachelor degree in applied science. He also has an MCA from REC, which is now NIT Tiruchirappalli. He also has 33 years experience in this Tata Group. Now another important thing to notice, Mr. N. Chandrasekharan, who is the chairman of TCS, is also the chairman of other Tata companies. So he is not only heading one company in Tata, he is heading multiple companies. Overall, the company is managed by highly experienced and qualified professionals. Now we can see the global presence of TCS in annual report PDF page 100. And as per the annual report, company has 50 subsidiaries. Information is available in annual report page 52, but the list of subsidiaries is only available in internet. Organization is headquartered in Mumbai, and the remuneration paid to the directors which is 9 members, is 47 crores. Information is available in annual report PDF page 84. Now, as per this understanding, we can see only below 0.2% of the profit is taken as director's salary, which means company is not mismanaged. So you can see on page number 100 of PDF document of annual report, you can see the TCS Global Map. North America has 19 locations, Latin America has 19 locations, UK and Ireland has the maximum, in Europe 20, then other part of Europe they have 7 locations, Middle East and Africa 1 location, India 107, Asia Pacific 8 and Japan 2. So in page 52 of annual report PDF document, you can see subsidiary companies title, and you can see company has 50 subsidiaries as on 31st March 2021. And if you go to internet, you can practically see the names. The information is not clearly given in annual report, so we get it from the internet. Now we can see the company has been founded in the year 1968, which means 53 years of solid existence is there. If you look at the recent financial results, recent Q2 2021 showing a net profit of 9624 crores, and the previous quarter Q1 2021 net profit of 9008 crores. Now if you compare to the previous year same quarter, that is Q2 2020, net profit was only 7475 crores, which means quarter on quarter there is an increase of 6.8%, and year on year there is an increase of 28.7%, which is looking good generally, but this figure came below the expectation. That is the reason why the recent correction happened. In this year, 4 dividends has already been issued with a total sum of 35 rupees. And the last issue was RS7 with an ex date of 14th October 2021, that is last month. No further dividend is expected this year. Going to the technical part, we can see the 200 exponential moving average is clearly below the price line, showing that the chart is bullish. And we can see the 48 and 13 moving average has a negative crossover towards downwards, that is showing a bearish signal. If you look at MACD is also bearish, but it is pointing slightly upwards, which means it is also bullish. Now if you look at stochastics is strongly bullish. Now if you look at RSI is perfectly neutral. Now based on the technical indicators, what I feel that there can be brief consolidation at this point, but after that share will certainly continue the uptrend. So the same thing is mentioned here as well. 200 EMA is bullish, but 13 and 48 exponential moving average looking bearish. 200 EMA is expected to act like a support. The current price is somewhat okay for the purchase. MACD is negative but looking slightly bullish as well, expecting the share to go for a brief consolidation. Hence the disappointing Q2 results are already digested by the market. No further correction is expected. Stochastics is bullish. RSI index is perfectly neutral. Based on the technical indicators, listen carefully, price may consolidate briefly and continue going up. 52% is bullish, 23% is bearish and 35% is neutral. Following buy on dip strategy is okay for long term. Support can be found at 3380, 3180 and 3000 levels. Any price around or below 3500 is a fair entry. Opportunities for all short, medium and long term between 3350 and 3400 will be much better entry. Minimum and maximum long term portfolio allocation is 2% and 4% respectively, which means you can buy just one quantity for a portfolio size of 1 lakh. Immediate target is 3600, medium term target is 4000 and long term target is 5000. If you found our video really useful, please like this video and subscribe to our channel. Thank you for watching.